I'm going to be covering today is mostly how it works. I'm not going to tailor it to any specific industry or any specific type of business. I want to show you what is available, and from there, I want you to extrapolate what you're looking to use it for. At any point, you can always reach out to Western Computer, and we can walk you through how you could go about using it in your own specific. So we're going to get started by looking at some of the setup. What you'll see is we do have a new module called revenue recognition. And so one of the things you'll need to set up is your revenue schedules. And what your revenue schedule is just how often you want to recognize it. So maybe before we get too deep into the weeds, we want to talk about what this is aiming to do. The purpose of this functionality is to not recognize the entirety of your revenue at the time of invoicing. Instead, it would get posted to an accrued liability type account and then deferred throughout your schedule that you create. And so you can see we have different types. We have one for 12 months and 3 months. We also have it based on occurrences. So this could be something when you don't entirely know when your revenue will be recognized, but you know that it will happen either once or 3 times. You can set up as many of these as you'd like, and you can choose how it's going to work, whether it's just going to start at the first of the month or the first of the next month. If I click into my details, you'll see that this is where you set up your various periods, and you can see the percentage that gets recognized along with any sort of rounding that needs to happen as well. So that is a key piece of configuration that you need to set up beforehand. You also will need to set up a journal, and this journal will be what gets posted to allocate the revenue from your liability account into your actual revenue account. And so you can see under journal names, we have one called RevRec. This is a new journal type that just recently became active, and you will need to configure one of those, which you will then configure into the parameters itself. So those are your key setups that you need to do before you decide to get started. The next aspect is to look at your items themselves. So to do that, I'm going to go into the items. Now note, you can choose to set up revenue recognition at the item group level. So if I go into item groups, I can see under audio, we now have a revenue recognition. So for example, if all my audio products were to follow a specific schedule, I could choose to specify that as a default right here. I could say that every audio follows a 12-month, and then I can say, is it active, yes or no? And then I can choose whether it's essential, non-essential, and post-contract support. We'll be able to see all those in effect in just a few minutes. But I chose to do it at an individual product level. And to do that, you go to Release Products. Now, I've set up 3 products that we're going to use throughout today. We're going to have a TV, warranty, and an installation fee. So my company, maybe it's called Best Buy, we sell TVs, but we also sell warranty and we also sell installation services. So if I go into my warranty, you can see if I come down below here, I have a revenue schedule of 12 months and I have it included in my revenue allocation. We also will look at the median price methodology later on in this demonstration. If you do choose to set up an item to utilize revenue allocation, one of the things you have to do is you have to set up the revenue price. So this is the amount that's going to be used on a basis calculation of how much revenue this item weights itself on a contract. And we'll see how that works in just a little bit. But you will have to set this up for every individual item itself. I've configured this to be my base price or my MSRP kind of thing. And then if I choose to sell over or under that price, the system will take that into account. So that is the setup that needs to happen. Now let's get into actually demonstrating how this works. So we're going to start with a very simple example, and then we're slowly going to get more and more complicated. So I'm going to go ahead and I'm going to create a new sales order. So I'm going to go here. And I'm going to put all 3 items on my sales order. So I'm going to sell one TV. And what I'm doing is I'm going to sell it at the revenue allocation price. So there's my TV, my warranty, and my installation. You can see that it's $1,400, $120, and $500. And I won't bore you by going into all of them, but that is how much I set up as my revenue allocation price for all 3 items. At this point, I'm going to confirm my sales order. For those of you who are already on Dynamics 365 or on other versions of the product, confirming the sales order is not a required step. However, to use revenue recognition, in order to see the implications before you actually invoice this order, you need to confirm the sales order. So I'm going to go ahead and do that now. And just take a second. There we go. And now under manage, I have my revenue price allocation. So what you see is I have my two products, my warranty and my installation. The list price, which is the selling price, is the same as the allocation amount. And as such, there's no math happening here. If we go and look at our expected revenue schedule, we'll see that we have 12 lines for my first products because it was a 12-month, that's my warranty. And so I don't want to recognize the full revenue of my warranty right at the time of invoicing because I'm going to earn that over the 12 months that the warranty is active. And so what you can see here is that this is expected to be recognized on March 1, April 1, so on and so forth. And so you can see that I have my 12-month schedule. Finally, I have an installation. Let's say my customer came in, they bought a TV, they also bought installation, but we don't know exactly when that installation is going to be scheduled. Same thing, we don't want to recognize the revenue yet because we haven't actually earned that revenue yet. And so that one has been deferred. Now, I can go into my actual installation item and under setup, I can go in and put in a contract start date. So let's say that today is February and we've come to a discussion with the customer and we're saying it's probably going to be in March. So I say 04/01/2020, save this, and I'm going to reconfirm this order. And now if I look at my expected revenue schedule, we'll see that this recognized date is now estimated out to be on March. Note that you are not locked into this, okay? This is an occurrence, meaning that if this doesn't occur in April, maybe the person goes on vacation and says, can you push it to May? That's perfectly fine. This one is on a monthly schedule and as a result is a little bit more fixed. So let's go take a look at how this is going to work. So let me go ahead and I'm going to ship my order. And now I'm going to invoice my order. All right, okay. So let's go look at the voucher. So what you'll see is that we totally sold for 2020, but we deferred $620 of revenue. And you can see that went into my deferred revenue account. That's because the TV, we wanted to book the revenue right away, the $1,400, but the 620 we did not want to do. And so that posts into my deferred revenue account. So we're good to go. So far, we have not recognized revenue on the amount that we didn't want to. So let's go to step 2. And for that, I'm going to create a second tab. And now I go back into my revenue recognition module. And under my revenue recognition schedule, this is where I can see everything. There's going to be a number in here, but I'm going to just filter on my customer account 009. And this is exactly what we saw earlier. We saw what we invoiced, and we saw that it was $120 amortized over 12 months. And so $10 needs to get recognized every month, and the first date is 3/1. So I'm going to say I want to create my journal. So let's say March 1 rolls around, and I want to do it as of 03/01/2020. I go ahead and I hit OK. And what you can see is this line has now been processed because we successfully recognized this. You'll notice it says 12 transactions created. That's because when you do it in such a way, it filters to every transaction, and there are other things out there other people were testing and whatnot. So if I go into my revenue recognition journal, you'll see a whole bunch of stuff, but the only one that we're going to care about is the $10 that was at the very end, and that's the one that we care about. All these other ones we're just going to ignore, so I'll just go ahead and I'll delete them. And so what you're going to see is, and just in case you're wondering, that's my invoice number. If I go to my invoice, there it is, 771. So this is that one item there, invoice 771. And so what it's doing is it's debiting my liability account and crediting my revenue, which is what it's supposed to do. And I go ahead and I post this. And we're good to go. We now have successfully recognized this revenue. Let's go back into my screen. And I go back to US 009. So we see this one's been processed. We now have a voucher as well because I posted this one. So now comes April 1st. And this is the scenario where this one is scheduled to be on April 1st. But when I go to do it, I determine, hey, turns out he didn't set up his installation. So I'm going to push this now out to May 1st. So I'll go ahead and I'm going to save this. And so now when I go ahead and I recognize for the month of April, we will see that this line has now been processed, but this one has not. 18 transactions are created. Again, this is all the other outstanding data that we have out there. But if we go back to our revenue recognition journal, we'll see there's my one line for invoice 771, and the $10 is there. In fact, I'm just going to post the whole thing. And so there we go. And finally, we'll do one more just to truly get everything hammered out. Let's say now they did indeed schedule their installation. So I'm going to leave this one as May 1st, which is, there it is. So if I do create journal now, and I put in my date as of 05/01/2020, and you'll see now if we go back into our revenue recognition journal, that's not where I'm going to click. You'll see we have two lines for invoice 771, my $10 for my warranty and my $500 for my installation. So both of those are there now. I can hit post. And I have successfully recognized revenue for both my warranty as well as my installation. And we can continue doing that, so on and so forth. So that is the nuts and bolts of the world of revenue recognition. Now let's get into a little bit more advanced topics. So the first thing we're going to do is what happens if we sell something for a different amount than our allocated amount. So I'm going to go back and I'm going to do I wanted to use my same customer, US 009, and I'm going to create a new sales order. So this is where things get a little bit more fun. So I'm going to do the exact same order. They buy a TV, a warranty, and some installation services. But you know what? I'm a little craftier this time. Instead of $120, I'm able to sell them the warranty for $200. Let me go ahead and confirm the sales order. So now, if I go look at my revenue price allocation, what you see is I'm going to export this to Excel so we can look at this in a little bit more detail. Let me drag this over here. All right, so what is this telling us? We sold $200 and $500 for these items respectively, but my revenue allocation price was $120 and $150. And so now what happens is we need to ratio up what our allocation is. So if I were to do this, and I would say, how much is my ratio? So if we do this, divided by sum of these two. That's 19% and 81%. And we had a total difference of $80. So what we're going to do is we're going to take that $80 and multiply it by our ratios. And then if you do 120 plus this number, it comes to 135, and $500 plus 64.52 is 564.52. So what happened is that we sold $80 worth of material more than what our revenue allocated was. So what we needed to do was we then needed to take that $80 and decide how we were going to allocate it across both of our lines. Essentially, we had a contract and we sold over that contract, so we needed to disperse the difference between what we sold and what we wanted to recognize. And so what you can see is my warranty now gets an allocation amount of 135 as opposed to 120, and my installation now gets 564. The key is that not all $80 went to the warranty line. It got allocated across both of them based on the net weight of each individual item. So that is how the system is going to take any price changes. If we had instead done, so let me come back here and I'm going to make this one 120 again. And now if I had said that I gave them a 10% discount on my installation fees, so $500, but I gave them 10% off. Let me confirm this again. All right, and we go back. And so now what you can see is both of the two lines have been ratioed down. And that's because we now have a lower than revenue recognized amount. And so both lines again went down, and once again, they went in the same ratio. So we lost $50 from our selling price versus what our revenue allocated price was. And so what you can see is that it went to 110 on this line, so we lost $9 here, and it went to 459, so we lost about $41 here, which again is about the ratio of our 4-to-1. So it always treats it as a contract, and that's what we need to remember. Now let's throw in our next wrinkle. Let us go into my TV and say, I also want to include my TV as part of my contract value. So I'm going to go ahead and do this. And I'm going to turn on this one as well. And just so you can see, my revenue allocation price is $1,400, which is exactly what the sales price is. So now let's take a look and see what happens. So I've turned that on. First thing I'm going to do is I'm going to take out my discount again. I don't want to make things additionally complicated. So once again, I'm going to confirm my sales order. So once again, if we go to a revenue price allocation, what you'll now see is that you have a line for the TV as well. If I go to my expected revenue schedule, you'll find that the TV does not make an appearance. I didn't actually add a defer to it. I still want to recognize my TV the minute I sell it, but I want to now include it as part of the contract. And so there's no deferring, but it is now part of my revenue allocation contract. Now, if I were to go in and change this price to 200, and I save this and I reconfirm it, all right, let's go back in. Now what you'll see is that my revenue to recognize amount has changed for the TV as well. So what you're going to find, and let's actually go through and process this one all the way. So I'm going to ship it. All right, and let's go ahead and invoice this. So if I go to my invoice journal, and again, I'm going to look at my voucher, what you'll find is that my amount that was immediately recognized is $1,455. It's not the $1,400 that we initially sold for the TV, because the TV received some of the revenue bump as well this time. And so my deferred revenue is now $644. It's not the full $700 because we have $500 and $200. It's only $644, whatever the number was, because the TV is now also a part of the contract, which means when you're doing all your revenue adjustments, it's also taking part of that revenue adjustment. So because you increased your selling price by $800, the total of that $800 got dispersed between both the television and the subsequent services. So these are the things I want you to keep in mind when you're looking to set up your own revenue recognition. which elements should be part of the contract, which ones shouldn't, and how will that take effect when you have a selling price